Business credit review. Hey, it's Ty Crandall here. And today what we are going to do is take a walk through what you need to be checking here as we finish 2022 and do a review of what's on your business credit report, what to check, what to look for, how to get yourself set up perfectly. And then I'm actually going to show you our event that's going to be taking place, I think like a week, where we're actually going to give you the blueprint for business credit building in 2023. So by the end of this, you're going to know everything you need to be checking on your business credit reports and what you need to be doing to get yourself set up this year for an year-end review. You should be doing this every year and then get yourself set up for business credit building the next year. And speaking of next year, we actually have a 2023 business financing blueprint that we're actually going to be rolling out here. And that is going to be taking place live Tuesday, December 6th. That is 1 week from today. And during this, we're going to be talking about business credit building. We're going to talk about over 25, I think 30 different ways to get the money you need to grow your business. Look, I'm sure if you're like me right now, you're thinking about what to do to make next year your best year ever. And I'm sure like me, part of your plans involve money that you need to actually do that. So we got to put the money in your hands to make sure you have the best year ever next year. And that's exactly what we're going to be doing a week from today, December 6th, live for this free training on getting your 2023 financing blueprint. And you can register at creditsuite.com/blueprint for that. We'll be helping you build business credit. We'll be helping you get all the money that you need to make next year your best year ever. Okay, so what are we going to do here in this business credit review? Well, first thing we need to do is we need to get access to the business credit reports. We need to make sure that credit is growing. That is the key to getting more money at better terms. We need to check for inaccuracies and fix any of those negatives that's on there. We're going to be making sure that it's optimized. Your business credit reports are optimized to get the money at the best terms. And this really sets you up to prepare for the next year's financing, right? And that's the key. Look, I'm not here to help you get money. I'm here to help you get more money at better terms. That's my goal. I want to help you get more money and get better terms and get approved versus denied. And the only way we do that is making sure that the data that these lenders and credit issuers are looking at actually meets their criteria, that it actually is doing what we want it to do and has the reflection we want it to have. So I'm going to teach you how to fix business credit today. We're going to talk about the things you have to look at on your report, how to optimize it. I'm going to show you how the more accounts you have tie into the more money you're going to be approved for. And this is really the formula to getting you more money at better terms for next year. So how do you read your report? What red flags should you be paying attention to? What do you do to optimize a business credit report, make it better to get more money? Okay, this all sets you up to prepare for 2023, and this is exactly what we're going to decode right now, starting with how to actually navigate your business credit report. So what's on your business credit report? Well, the first thing we're going to look at is business information, right? This is your name, your EIN number, all of your business address, your business phone number, those kind of things. The account information, inquiries, public records are on there as well. And we're going to break down each one of these, but this is kind of an overview of your report. We have the information about your business. Then we have your account information, like your NAICS or your industry code. If that's wrong, that creates all kinds of problems. So we got to look for that. We got to look at account information or accounts reporting that we're paying on time, early, late. We got to make sure that that's correct. We got to look at inquiries. This gives us an indication of who's looking at our business credit report, making decisions about us. What's on public records that we might not know of? What do we need to dispute? What do we need to fix? So the first thing we're looking at is our business information accurate? Meaning, is our name on the business credit report spelled correctly? If I am Credit Suite Inc., does it say Credit Suite or does it say Credit Suite Inc.? We got to make sure the name is correct. We got to make sure the spelling of it is correct. Believe it or not, this is one of the biggest reasons that business owners get denied is that lenders pull your credit report or pull your Secretary of State record. And what happens is you don't actually match the data from the application you're submitting. So we've got to make sure that this information matches, especially considering, actually speaking of company name, drop your company name in here. Let me give a shout out to you. Tell me where you're coming in from. Give me your company name and I'll give you a shout out right here on the live stream, where thousands and thousands, if not tens of thousands of people will see it on our YouTube channel. And Terry, thanks for coming in from Dallas, Texas. And Deborah, thank you for coming in. Lynette is in the house as well. So thanks for coming in. Tell me where you're coming in from. Tell me your company name. I'll give you a shout out here during the actual training. Address. We got to make sure the address is correct. A lot of business owners make this mistake, and I'm going to tell you how to curb this mistake. What happens is you make your address your home, for example. then you move addresses, you move homes, right? Or you get an actual business address, then you move your business location. So the best thing to really do is just get a virtual office, Regis, Alliance, DaVinci. You can even go to creditsuite.com/virtual and find like a discounted rate and the best terms you're going to get working for Alliance, for example. And you can set up an address. That way, have that address as your mailing address, have that as your corporate address. The address never changes. You could move houses 100 times. The address, the virtual office always stays the same. What's nice about virtual offices, they'll scan your email and they'll actually message you when you get it. Or they'll scan your mail and even email you when you get it. So you could have an office here and then move 45 miles from here and still be able to know whenever you get email or whenever you get mail to your actual address. So I think it's a good idea. I like virtual offices because they're not expensive. You oftentimes can get them for less than $100, as cheap as $40-$50, depending on the city that you're in. And you never need to change your address. But regardless of whether you take my advice on that or not, you at least need to make sure that your address is correct. You need to make sure that it is up to date on your actual business credit report. And we've got Fix Your Credit Counseling. Awesome. I love the name. Hello, everyone. And Tazanga is in the house. Brown and McNeil Property Preservation Corp. in Homewood, Illinois. Awesome. Prestige Cleaning Solutions in Nashville is in the house. 3G Business Consulting LLC out of SoCal. And the Spacer Shop LLC located in Kentucky. Thanks for everybody for coming in and joining me and giving me a shout out. Tell me your company name. I'll give you a shout out right here on the stream. It's just like free publicity for you. You need to make sure that your phone number is correct. It needs to be toll free. It should be listed in 411 as well. You need to make sure your entity structure is correct. Are you an LLC? Are you a corporation? Is that reporting accurately on your business credit reports as well? Okay. Are there unknown accounts on there? Okay. So this is really an overview of your business information. The other thing I want to add here is your NAICS. Is your industry code correct? You can go to NAICS.com, figure out what your industry code is supposed to be, and then you need to make sure it's up to date on your business credit reports. Very, 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 very important. And the reason it's very important is, first of all, the business credit reporting agencies will give you failing scores even if they do not like your industry. So if your NAICS is wrong, then it's adversely affecting your credit scores. And the reason that matters, and I'll show you a real example here, the reason that matters is because your business credit scores ultimately determine the rate that you're going to pay on things. So if you want to get the best rates on loans, on credit lines and business credit cards, then we absolutely have to make sure that we have a low risk NAICS reflecting on our business credit cards. If we don't do that, the problem is that we're seen as higher risk than what we are. And the issue there is that we pay worse terms. We pay higher interest rates than we should. Here, I'm going to give you an example of this. I'm looking at a real Experian business credit report, and you can see here that their score's not extremely low, but it's pretty low, right? Here's high risk, here's low risk. You want to score closer to 100, it's a 28. So it's pretty high risk. And look at why it's high risk. The risk associated with the company's industry. They don't like NAICS. And the second thing is, if we go to this depicts the risk of going bankrupt, closing your doors, right? About a higher risk as you can get here with the 6 score. The person doesn't have any trade lines reported. That's the first thing to note here. We're looking at an empty business credit report. I'm going to scroll to the bottom, and I'm scrolling kind of fast. But this is the bottom of the report. There's nothing here. I mean, this is it. There's 0 trade lines. So we're already seeing a failing score, and there's no business credit established. But look at the other reasons here. Risk associated with business type. Risk associated with company's industry sector. So of the 4 risks that make it almost to a point where it's a higher risk of shutting their doors and bankrupt, then we find that of that, half of the reasons the bureaus doesn't like the industry. They don't like the industry sector. Okay, so what we got to do is we got to look at these reports, and we want to make sure this information is correct. I mean, is this our correct address? Is our correct business name? Is our phone number correct here? And then we also need to look right here, and we need to make sure that our NAICS code is correct. Okay, now I have no idea why Experian doesn't like dance schools. I don't know what deals with that. Apparently Experian does not like ballet. I can't account for that. But I can only tell you that you can see here that they don't like the NAICS. So we see that they're seeing this as high risk. And the interesting thing is these are things we can change. And when we change these and update them, then we don't find that these scores are as low as what they are. So that's just one example, but we've got to make sure that NAICS is correct as well. When we look at accounts, are there any unknown accounts? The answer is yeah, they're all unknown. And what I mean by that is that when we look at business credit reports, see if I can pull that thing up again. When we look at business credit reports, and this is a bad example, they don't actually say the name on them for who the actual credit is with. So who's issuing the credit. So we're used to consumer credit reports that show us this stuff, but business credit reports really don't. And here, I'll give you some examples. Let me pull up one with a lot of trade lines on it here. This is pretty good. So you can see here, these are all accounts on the business credit reports, but see how it says communications, financial services, office supply, packaging, retail, warehouse. See, we don't have a creditor name. And the crazy thing is, even if we ask them what the credit issuer was, they won't tell us. So we have to, as we build business credit, keep track of these companies. Hey, I just got to prove that reporting is communications. This is Verizon. Hey, I've got another communications on there. It's through T-Mobile. My limit is this. It's a really good idea to keep an Excel log with this because we don't know who's who. Now, the good news is this problem makes it very easy to dispute, meaning that historically we've disputed business credit reports and have very little to no issue getting negative items removed because it's hard for them to validate this when they won't even tell you the company name, right? And you're saying it's wrong, I don't know who this is, and they won't tell you the company name. That's pretty hard to refute. So again, easier to dispute, but bad because it's tough to figure out which accounts you know and which ones you don't. It's a good reason you need to track these. If you don't, you're going to have a lot of unknown accounts. Are the credit limits accurate? Well, you need to, again, see how much you've used on the credit report, but credit limits themselves aren't going to be here. So what's interesting about commercial reports is we see the recent amount of credit that we've used, but we don't, and we see our balances, but we don't see the limits. So it's a good time in our end of year review to call the actual credit issuers, to ask them what our limits are, and to ask them to increase the limits. Utilization doesn't really affect commercial credit scores. It is a factor in some scores, like one Experian has, but not the main scores the reporting agencies have. But we still want to make sure, listen, get as high limits as we can get, because even though they're not reported here, credit issuers and lenders on the back end do see the limits. So even though we don't see them on front-facing reports, lenders do. So it's a good time at the end of the year just to go through our personal and our business credit accounts, credit reports, or credit cards, and ask for higher limits. Just ask them to raise their limits. I do this every 6 months with every credit card I have, unless they're going to put an inquiry, and those I don't. And eventually I stop using those. Because what happens is I keep getting higher and higher limits. Every 6 months I request it, my limit gets higher on my primary cards. Then what happens is the cards I don't use very much, I'm not using them very much, so they don't raise my limit. They won't entertain raising my limit without putting an inquiry in my credit report. I won't let them do that. So inevitably what happens is some cards limits just stay where they are while others exceed it considerably. And then those other ones I end up shutting down or replacing with higher limit accounts. So again, it's a good idea at the end of the year, and every 6 months for that matter, to just ask them about raising your limits, because again, that's going to help overall. You get higher limits from other accounts. What I mean by that is that in the consumer and commercial world, credit issuers mimic whatever else you've been given. If you have a $10,000 limit credit card, you're probably not going to get 25. It's just not going to happen. But if you have a $10,000 limit credit card, you can get 12 grand, 13 grand somewhere else, something kind of close to what you have, but a little higher. So our goal here to get you the most money is we need to get our limits on our existing cards that report as high as we can get them. And the easiest way to do that is just build a habit of even put it on your calendar that 6 months later, June and December, let's just ask them for limit increases all the time. I ask them for an immediate limit increase when I get approved. I ask them for one every 6 months after. It's a good habit for you to do, especially, you're breaking up. Audio is not good. Okay, it's going out. Okay, give me 1 second here. Try to see if I can fix the audio. Audio, microphone, ATR microphone. Okay, no, okay, please fix the video. Okay, hold on a second. So everybody's having problems with the audio. Let me see here. My video should be good. Let me see if I can fix the audio. The audio is not going to sound as great here. So I think my microphone is all hooked up. Okay, give me some feedback here. Let me know, is this audio okay? Just let me know if the audio is having issues or not. So is the audio okay, yes or no? and I could either switch to a different audio source based on your feedback, but I need your feedback in order to get this done. So if you don't know, I got everybody coming in here. Okay, hold on a second. Let me see here. Okay. Audio is better. Mic is breaking up on the video, but the mic is better. Okay. All right. So I think the audio is okay. If the audio is not okay, tell me now. And then what I will do is I will then change to another audio source. Okay, perfect. I think I adjust some things here. I think I hit something. If it's not, let me know. And then what I'll do is I'll switch to another audio source. And I appreciate everybody let me know. It was the screen share report. Okay, so now I know what's causing that issue. Okay, so high balances. What are the highest recent balances you've had? It's a very big deal. Credit issuers look at that. Okay, I want to just test something real quick. I want to test that if I pull this up, this might be causing the audio issue. It might not, but I want you to tell me if it happens and let me know. Okay, because in that way, if it's because we're looking at this, then I know that. So if you let me know if there's an issue, that I can figure out what's causing it. So on this, again, we're looking at the recent amount of high credit limit we used. And why this is important is that we're not going to get $10,000 limit credit cards if the highest amount we've spent is $400, $100, $200. Makes sense, right? Nobody's going to give us 10 grand when we're only spending $400,000 on any account we have. So that's why we've got to have accounts like this that show higher amount. The audio is good now. Okay, good. So we got to have accounts that show higher amount of usage here for us to get higher limits. So the goal here is to do an end of year review to set you up to get the most money next year. And in order to do that, we got to make sure if we're spending money on credit cards and it's not showing here, we got to figure that out. We need to know about that. So we want to look at this too. We want to look at these recent amount of high credit limits we've used to make sure that those are accurate as well. We want to look at our current balances and see if those are fairly accurate. The payment history, is that accurate? Now remember, in the business credit world, we are considered late even if we are 1 day late. Okay, we call this DBT, or what's known as days beyond terms. So you can see right here that we're either current 100% on these. We're 1 to 30 days beyond terms, which means we're 1 to 30 days late. So even if we're a day late, it counts against us. We also see 31 to 60, 61 to 90, 91 plus. This is how the reporting agencies look at it. So, and again, the more we are late, the lower score we will have. So what we want to do is we want to make sure that we see 100% current and not that we're late in any of these areas. And if so, we really want to consider going and disputing it with the credit bureaus. With Equifax and Experian, we can dispute online through their credit monitoring. And with DMB, we can do it right through what's called the DMB dashboard. But however we do it, if we have late payments and they're not accurate, we want to dispute those and get them to remove. This is what your score is primarily based on. Most of your main credit scores in the credit world, including Experian and Telescore, is based on how you're paying your bills. So you need to make sure that you have as few days, and I know I'm scrolling kind of quick, it could make a lot of you sick, but you need to have as few days beyond terms as possible, because if we don't, then that creates issues, okay? So predicted days beyond terms is 1. So you can see they even predict when we are going to be late, so we need to make sure that we don't see that. That is really the key to us getting the better scores. So the better scores, again, are really the key for us being able to get the most money. And somebody says, what entity is better for forming a business credit profile, C Corp or LLC? It doesn't matter between those two. In my order, corporation is best, C Corp or S Corp, LLC is second. Those are the ones. Choose one, doesn't make a difference, but corporation is going to be better for you. Hello from St. Louis. Croby Holdings LLC is in the house as well. Cohen Credit Restoration. Going to make some changes soon. I love that. Michael Fenton, thank you for coming in as well. Fast LLC. I love that. Thanks for saying hello. So everybody, thanks for giving me a shout out. Okay, so date of last activity. Are these accounts actively are recently active, and yet they're showing they're not? We got to look for those things as well. Okay, so are there unfamiliar inquiries? Look, the reality is, if this is public information, we're not going to see who puts inquiries on our credit report. We're just not going to. It's not going to tell us that. But what it will do is it will tell us if we have inquiries. So we go to the very bottom of the report, we can see here who's inquiring, what category is inquiring, and when are they actually inquiring, on what month. So are these consistent with who we're applying for? Like, I shouldn't have credit card inquiries unless I'm applying for credit cards. So if I see inquiries on here and I see a lot of them in certain sectors, that could mean somebody's possibly using my business credit report and I don't know it. So do I see anything odd here? This isn't odd. There's some random ones, general, communications, credit cards, right? These are pretty, this is pretty expected. But if we see unexpected things, then that actually may be something that we want to look into a little bit more. So are there inquiries on there? Are there public records? Are they accurate? Are there UCC filings? Are they accurate? So we can look at that information as well. So we need to see if there's actually any public information data on here. And those are usually bankruptcies. Those are usually lawsuits. They could be judgments. So do we see any of that on here as well? Payment and legal filings. Okay, so let's look and see. There's no UCC filings here. There's no judgments. There's no bankruptcies. There's no tax liens. So we see this legal filing section. We need to check that because by looking at the legal filing section, this will actually tell us if there's anything here we need to address. Why is this important? I'm just going to give you an example. We had a loan, the very first loan we ever got. We paid it off. The bank that we got the loan with went out of business. No big deal. I don't care. Years later, we're applying for an SBA loan. That bank put a UCC filing on our credit report, and they never removed it. And they went out of business. So it became a mess. It delayed the loan by a month to 2 months. Because how do you do that? One of the underwriter stipulations, you have to prove that there is no UCC filing, but we can't when the bank that filed it is no longer in business. So we had to go through this whole process to prove that here's the loan, here's where we paid off the loan, here's the confirmation the bank's not in business. The problem is that it delayed the loan for 1 to 2 months. If you're trying to make next year your best year ever, and you're trying to get SBA loans and credit lines and loans, you don't want to lose a month to 2 months worth of time because this information's inaccurate. And that's realistically what happens. Okay, we had judgments on my credit report which were not accurate. They required to collateralize my home. Okay, I didn't want to put my home up as collateral for the loan. I didn't need to. So once I proved the judgments weren't mine, then they removed that stipulation. But again, it held up the loan for a month to 2 months. So the reason we do this end of the year review is to avoid those kind of problems and make it easier and faster for us to get the money when we actually need it. So once we've reviewed it, next things that we want to do is we want to start optimizing the business credit report. Do we have enough accounts reporting? Okay, 1 to 3 credit lines get you a basic score. It takes 1 to get you a score with DMB or with Equifax Experian and 3 with DMB. So you need to have a score. If you don't have a score report, you don't have enough accounts reporting. You got to get that started first. Then 10 to 14 really get you the top tier of business credit building. They get you Visa cards or MasterCards or what we call bank credit or universal credit. And it's also what gets you auto financing. It's what opens up the door for hundreds, if not thousands of vendors. Okay, but in order for that to work, you need to have 10 to 14 accounts on your business credit reports. Do you have those? If the answer is no, then you really want to focus more on building business credit. And by the way, I just did a how to build business credit for 2023 last week, I think. So if you look on YouTube at one of my most recent videos, I went 2 hours and just mapped out everything you need to know about building business credit next year. We'll touch upon some of that in our live training next week as well. Are you using your business credit accounts? Remember, we saw the recent amount of credit we're using. They're tracking that versus actual credit limits. So we need to make sure that we actually have accounts that we're using on a regular basis. They say every 12 months, which means that it really only calculates into your score if you're using it once every 12 months. So everything on your business credit report should be used every 12 months. We advise our clients every 6. At least every 6 months, you should be using the accounts for something, just to be able to keep that activity on your actual reports. You want to use them so you actually get payment. You get credit for the payment history. The more credit you use, the more credit you're going to get, bottom line. And the reason for this is, and we see this when the economy shifts, what happens is banks tighten up. So what they do is they go to people that are not using the credit limits they're given, and they just pull those credit limits. They take them. They lower your limits on your accounts because you're not using the credit you've been given. They need to free up that credit to give to other people. We don't want that to happen to us. We want to show the credit issuers and lenders we're using the money you give us. So the credit limits, we need to make sure that we're using these accounts. We're even using higher amounts and then paying them off. That's the kind of activity that's going to help us get a lot of other future approvals as well. Is there anything derogatory on there? We want to check those reports for errors. We want to dispute them with the bureaus. Like I said, DMB, we do it through their dashboard. Equifax, Experian, we can do it through their direct credit monitoring. But again, we want to dispute anything that's inaccurate, unverifiable, shouldn't be on there in the time frame that it is. Those things we want to get removed. So what are other things we should do to prepare for next year? Well, again, the key is if you need business credit and have a roadblock, if you need, vendors and you need, access to your reports, then just get in touch with us. If you go to creditsuite.com/consult, you can give us a call. You can schedule with us. We'll go through your business credit reports with you. If you don't have them and you think you have business credit reports, we'll give you the links to get them for free. We're the only company in the world that actually gives you DMB, Equifax, Experian reports for free. And by the way, they're not free for us. We literally pay for them, but that's just something we do because business credit building is so important to us that we want to make sure you have the information that you need. So these are things that we can go through with you on a consult. We can help you get your reports. We can go through those. We can give you tips and tactics on an individual basis to improve that as well. So first thing you want to do is if you want DMB credit monitoring, make sure you go to creditsuite.com/monitoring. It's $250 from the bureaus. You can get it for $24 here. It's the cheapest that you're going to get it anywhere. We literally buy it from NAV wholesale and even have a price lower than what they offer themselves, just because we want you to have the cheapest business credit monitoring to make it possible. For $24, there's no reason to not get your reports and have them reviewed. And again, we'll review those for you at no cost. We'll even give you reports at no cost as well. And then also grab our blueprint at creditsuite.com/blueprint. This blueprint literally maps out everything you're going to want to know for 2023 to build your business credit. We give you fundability advice. We give you advice on vendors to choose. We give you advice on the tiers to actually navigate building business credit. 100% free resource that'll help you through the process to get yourself set up. And again, don't forget that you can also get your free finance assessment. We'll get your reports. We'll review them for free. We'll give you tips and tactics to improve them. We'll look at your business structure, your fundability, give you tips and tactics there. We'll even do a finance qualification to tell you all the funding you can qualify for. And also don't forget, if you want money next year, that's exactly what we're going to decode next Tuesday at 1 o'clock Eastern time. You go to creditsuite.com/blueprint. Actually, I told you that was a guide. That's not a guide. That's the register for our training. And on our training, we'll actually get you access to that guide. But on our training, actually, if you, let me go back here because I think it might have been incorrect. Okay, so back here, I told you that guide was at Blueprint. I think you can actually get the guide at creditsuite.com/EIN. creditsuite.com/EIN. We temporarily put this event at creditsuite.com/blueprint. This is our signature event to end the year to map out all the financing for 2023 you need to know about. Look, a lot of new funding is rolled out this year, and you need to know about it. You need to know what you can qualify for. We're going to decode all this next year. So you're going to walk out of, or next week, next Tuesday at 1 o'clock, you're going to walk out of the training and go, oh my gosh, I know exactly the money I'm able to get right now. I can get this credit line, this loan, this credit line, and these credit cards. I can get that right now. Let me get it. Let me lock it down. Let me secure it to pave my way for 2023. So all that's at creditsuite.com/blueprint. We're going to be covering that next Tuesday at 1 o'clock Eastern time. So make sure you register. If you got value from this training, like and subscribe. Go to creditsuite.com/toolbox. We get about $400 worth of goodies here for you as well. And all you have to do is share our next live stream, and you get them. They're yours. So again, go to creditsuite.com. Check out our new site. It's up here in the last couple months. A lot of great information on financing you can get, building business credit, everything you need to know. And make sure you register for our next training at creditsuite.com/blueprint as well. So I'm going to go ahead and wrap up. Thanks for your patience as I work through my audio issues today. I look forward to seeing you Thursday. We're going to do our podcast live here on Wednesday. And then Thursday, we'll be back with more training to help you get money to start and grow your business. And don't forget to go to creditsuite.com/blueprint to register for our free training on your financing blueprint to get everything you need to map out your financing for next year to have the best year ever. Thanks for tuning in. Have a great day. Look forward to seeing you on our next training where we talk about more cool ways